Hi, you're watching Investor Insights, and in this video I'd like to talk to you about protecting your portfolio. And I'm going to start by asking you a question. How much is your car worth? And regardless of whatever number you dish up, I'm going to ask you, do you insure your car? And if you're a responsible adult, the answer should be yes. How much is your house worth? Do you have that insured? Both building and contents. Now, if you're going to insure your house and its contents because it's worth hundreds of thousands of dollars, it's worth protecting that amount. But if you have a car that's only worth $20,000, is it worth buying insurance for it? Well, the answer is still yes, because 20 grand is a lot of money. Now, take a look at your stock portfolio. If it's of any size of note, you should have insurance for it. No, you can't go to QBE or NRMA and buy a policy for your stocks. But you can buy some put options against your stocks. So in the event that the stock was to fall, then your option is going to cushion your fall and rise in value instead. It's really worth considering in this tough investing environment. If you happen to buy a stock and you put a lot of money into that one trade, say your portfolio is $100,000 and you've dedicated $50,000 of that, you've allocated half of that into this stock XYZ, and it moves against you 20%. Doesn't matter if it's sheer bad luck or bad research or just the market's tanking, doesn't matter. You've lost a quarter of your portfolio. Now, if you had bought some put options that are just below your entry point to the tune of the size of your portfolio, then as much as your stock's going to go down, your options are going to rise by roughly the same amount. So therefore, you've cushioned your investment. You've protected your investment or that amount of shares against further drops. It sounds wonderful in theory, and it is wonderful, but unfortunately put options aren't cheap, especially at the level that you're just getting in. A put option is really cheap if it's far below your entry point. So therefore, the act of buying these put protection for your portfolio is going to eat away at your gains. But it's worth it. I wouldn't hesitate anybody, especially people who are just new to the investment game, to do just that. Regardless of how bullish you think you are or how bullish you think the market is, sometimes through bad luck things happen and money gets lost. But this way your losses will be capped. And in fact, you might even make a profit out of it through selling your put options when the stock falls low enough. So to recap, if you buy insurance for anything of value that you own, your stock portfolio should be no different. If you don't know how to do it, consult an advisor and they can teach you how to do it. Me personally, I'm not an options man, And I myself don't trade in stocks very often anymore. So it's not within my scope to teach you how to go and obtain put options. But in general, they're very good to shield you against losses. It doesn't matter how much they eat into your gains. It's worth it to have that insurance.